5, right? Okay. I want to ask, right? You all know when is your first test, huh?
First test. You
Uh,
mean first test?
yeah, first test one.
I think.
Like,
Oh, next
yeah,
Friday. Yeah, Friday
next
night.
Friday at night, what
Yeah,
time?
not sure. Not that. Don't know. Oh, 7 p.m.
7 to 8:30, yeah. Okay, right. Uh, I don't think yeah, okay, I will discuss it later in scenario how lah. But 7, I don't think I can make it because normally, yeah, 7 is I haven't even had my dinner because I reach home about 6 something, like before 6:30. Okay, right. Okay, I want to ask, right, your tutorial 4. Any question on tutorial 4? Those that you have handed in your homework already marked, yeah? Ah, so I think Farah, you need to do a bit more.
Oh yeah,
ah,
I haven't upload the
ah,
tutorial too,
yeah,
right?
yeah.
Oh,
I think so. I have to check also because I can't remember. But I think up to date one is Noella. Farah, yeah, I think so far I only marked tutorial 1, tutorial 2, 3, 4 below. Then Kelvin, I think up to tutorial 3, I think, right? Yes, yeah. So for your first test just now, I saw the okay. Did I download the? Did I download? I think maybe I haven't downloaded. I think for your first test, only the first 3 chapter, if I'm not mistaken, right? It's actually the first 3 chapter lah. Yeah, I think it's a bit. Let me Uh, from your form, yeah, did Mr. Naro share with you the form B? No. Form. Okay, let's see. Right? Okay. Form B, form B. Oh, right. Okay. Let me see this. Wait, where my screen is. Hmm. Yes, loan is actually a non-current liability, correct? Yeah. Because loan, normally when we talk about loan, it will be definitely more than 1 year. So that's why it's classified as non-current liability. Okay, can you see my screen? Yeah, this is your form B. So where you can see week by week what you need to do, and then some of the reference material. Yeah, right. I think this one we just got it recently. You see the date just signed yesterday. Ayo. Okay, so this is you can see here your test. Correct? Yeah. Can you see here the test one? Your test one got 3 questions. Question 1, 2, 3. So it's actually test one, test two, although got 3 questions. Then it did not tell you which chapter. See, week of submission is week 3. So basically meaning, yeah, we were a bit behind, but never mind. This is only a guideline. So your test will be next week, meaning it's week 4. So it's still okay. So there's actually 3 questions. Okay. I have to look at the other document, but
what is waiting, miss?
this one is actually okay. I believe, right? This test plus together is 100 marks. So meaning 12% from question 1, 46. like 12 marks from question 1, huh? Like 46 marks from question 2. Yeah, and then 42 marks from question 2. Is it these three number plus together, is it equal to 100? It's equal to 100, isn't it? Correct? So that's the weighting, like the percentage. So it seems like question 1 only 12%. So it's meaning it's not that heavy. So the most important one is actually question 2. Oh, so what is your but the thing is here they did not tell you what are the topics, right? Okay, later I need to. Did Mr. Narong tell you what's your topic? Or not? Will you tell you what's your topic? I have to stop presenting to okay. Let me stop presenting to see okay. I need to go and check on the other document. Can't let you see this because some of the okay this morning I take a glance, but I think okay. So your test 1, right? Chapter 1, 2, 3, lor. Meaning question 1 is chapter 1, question 2 is chapter 2, question 3 is chapter 3. So your question 1 is actually intro to accounting. Intro to accounting is I think it's a very basic one, like what's your accounting question, the form, the nature, the form of the company, right? Let's say like you have sole proprietor, you have partnership, right? You have limited company. Right. Chapter 2, it has got the most mark, that is the cash cycle. For cash cycle, this one, most likely they ask you to do cash book. You know, 3-column cash book? From 3-column cash book, then you can prepare a ledger where you can prepare sales ledger, purchases ledger, and then you can prepare a general ledger. Okay, cash cycle. And chapter 3 is your purchases and sales cycle. This one is your journal, purchases journal, return outwards journal, sales journal, return inwards journal. This one after the journal also you're asked to prepare what? You're asked to prepare what? General ledger, right? The control account, the trade payable control account, the receivable control account. And of course, you can also do sales ledger, purchases ledger, where the individual customer and the individual, supplier. All right. So question 1 is chapter 1, question 2 is chapter 2, question 3 is chapter 3. So meaning your first test is only cover the first 3 chapter. Okay, 1, 2, 3. So meaning chapter 4 not included all. So I believe test 1 should be quite easy lah. Yeah, because it's the first 3. It's not that difficult. So you can actually I did identify some questions for you to try, right? Okay, so later on, if we have time, then maybe we can try some of the questions. From the past year, I think I identified 3, all the question 3, right? In 3 different past year, right? In 3 different past year. Okay, so let us do our today's tutorial first. Get it done. Today's tutorial is actually theory, right? Accounting concept. So it's all the theory. There's no calculation at all. So all the theory. Okay, let me find my question. Accounting concepts and conventions, right? So this one, not many questions. Not many questions. Very, very slow. Okay. What is different my screen first? Okay. Right, you can see, this is the answer. Okay, this is the question. You can see my screen, right? Okay, so you need to tell me, like part 1 is, okay, are you able to identify all the accounting concept and convention? If you understand, okay, then you should be able to tell me the answer. What is A, what is B, what is C, what is D? All right. Okay, just try. Now, for each of the following statements, state the accounting concept that is most closely related. So the first one is that once a particular financial period is adopted by a business, it is not changed from one period to another. So meaning, once you adopt a certain accounting policy, like for example, you say depreciation, we always use the same method. Yeah, let's say we always say, okay, our depreciation, we always apply the same method. Let's say a straight line method, for example. So you're going to use straight line method year after year, year after year. So that is the meaning. So which one is that? Yeah, anybody? Which one is your answer?
Consistency.
Yes, yeah, consistency. Okay, consistency. All right. Yeah. So consistency meaning you're going to consistent. Once you adopt method A, so you're going to use it from period to period, from year to year. Okay, consistency. So the answer for number one is consistency. Yeah. All right. Okay. All right. How about the next one, second one? Part B, what is the answer? Part B actually asks for what? Yeah, part B is what? Financial statement of business report the economic activities of the business only and do not include economic activities of the owners of the business. Yeah. So you see, when we prepare a financial statement for the business, we only deal with the business. We don't put in the individual, the individual, or we don't actually include the owners, the owners transaction, right? Right now, yeah. The all yeah. The we don't include. So only the business. So according to what accounting concept is that?
Business entity.
Yes, business entity, or we call it a separate entity. Yeah, business entity. Okay, so the second one is this business entity. Or another name is called separate entity. Yeah. Okay, yeah, business entity. All right. Okay. Yeah, business entity. So the business is business. Your personal thing, right, cannot put into the business account. So like for example, if you use the company's money to pay your house rental, okay, this one we must classify as drawings. Yeah, you have to put it under drawing, then to be deducted from your capital account, right? So that's why drawings is on the debit side. Your capital is on the credit. So when you have drawings, so one the credit side and drawings on the debit side, so it will reduce our capital. Yeah, all right. Okay, the third one, generally, business is assumed to have an indefinite life unless there's evidence to indicate otherwise. What is this? Yeah. When you form a
Going,
business, sorry?
going concern.
Yes, going concern. Yeah. When we form a business, we hope the business will continue to go on and on, right? Yeah, it will go on and on. So it's going concern. Yeah, going concern means basically we do not know when the business will be closed down, and we do not want our business to be closed down, right? Yeah, so it's a going concern. Yeah, keep going. Okay, going concern. Okay, the fourth one, cost of a calculator in an office is treated as period expense. Period expense means that we treated it as our current year expense. Like let's say if you buy in the year of 2020, so let's say in the year of 2020, in the month of January, you actually bought a calculator. So let's say this calculator costs you a 50 ringgit. So this calculator, you are going to treat it as your month of January expenses. So it's a period. Yeah, all right. So a period expense rather than depreciating it cost over its useful life. Yeah. So we don't go for depreciation for a calculator. So what accounting concept, do we apply? Saying that, a calculator is something small. The value is small, or we call it immaterial. Yeah, immaterial. So what accounting concept?
Materiality.
Yeah, materiality. Yes. Okay, it's materiality. So it depends on what you buy. If let's say you bought a printer, and this printer you expect to use it for 5 years. Normally, printer you can use it for more than 1 year. Right? Okay, so this is what we call a non-current asset, where we need to provide depreciation. Yeah, and then some of you will ask, hey, miss, calculator, I can use for more than 1 year. Then I cannot treat as non-current asset, man. Why calculator must treat as expenses for the year or expenses for the month? Why calculator can use for more than 1 year? Don't, not treating as a non-current asset. Why? Okay, the reason is because calculator is only like 50 ringgit, right? The value is very small. So imagine a 50 ringgit calculator. Every year you go for depreciation. It's very tedious, right? Let's say let's say like you assume your calculator can use for 5 years, right? So, depreciation for 5 years. So if you use straight line method, so meaning every year your depreciation only 10 ringgit. So you see the amount is so small, and you need to provide the depreciation. Wow. If all the small items you provide depreciation, then a lot of work, so that's why when we apply materiality concept, right, we don't normally we will set a amount, the amount. Let's say you said, okay, anything that above 1,000 ringgit is a non-current asset. Yeah, so anything that you buy, if it is less than 1,000, then it is not your asset. So you treat as your expense. So this is what we call a materiality. So we see how material is this thing. Is it very expensive? Yeah. So if the value is very small, then we treat as an expense. Just like you buy screwdriver, those hammer, screwdriver. All this also the value is also very small, right? Very cheap, we say. Right, very small. So that's why all these small value one, right? Okay, we treat as expenses for the year or for the month. Okay, so we don't treat as asset. Yeah, we don't treat as asset. Okay, the next one. The record of credit sales is done by referring to sales invoices issued to customer. Yeah. So when you record your credit sales to your sales journal, for example, yeah, you must have based on something, right? Based on what? Oh, based on the invoice lah. The customer come and buy from me, so I definitely will issue an invoice, right? Okay, I will give there's an invoice, to the customer. Yeah, so you base on the sales invoice, right, to do the recording, isn't it? So what do you call this? What accounting concept do you apply? The record of credit sales.
Substance over form.
No, nope. The answer is objectivity.
Oh,
Yeah. Objectivity. Objectivity is you must base on something solid. Okay, you must base on something solid, like based on your receipt lah, based on your checkbook lah, right? Based on your invoice. Based on, So when we do double entry, right? When you do your cash book, record your 3-column cash book, your sales journal, purchases journal, right? So you must base on something like invoice, receipt. Yeah. Okay. Let's say you go and buy. Let's say you buy a printer. Yeah. So after you paid, they will give you, a invoice, a receipt, isn't it? And on top there stated, okay, already paid. When do you buy? Yeah. So you base on this to actually record your double entry. So it's actually called objectivity. Yeah. Okay. Objectivity. Okay. The number F. What's number F? An accountant generally recognizes losses when there's evidence to indicate a high probability of the losses occurring, but gains are not recognized until they are actually realized. This one, yeah. Normally, right, the accountant is able to estimate would this be a loss? If we estimated that very high chances that this will be a loss, then we should recognize it as a loss immediately, meaning in the current year. Immediately in the current year. Okay. So what accounting concept tells you that you must be very careful. All the losses must be taken into account immediately.
prudence.
Yes, prudence. The answer is prudence. Yeah. So according to prudence concept, right, all the assets Okay, all the assets, the income, we cannot overstate. Yeah, cannot overstate, right? We cannot overstate all the assets, all the income. And at the same time, all the liability and all the expenses, losses, we cannot understate. You don't say, some people say, "Ayo, I made a loss," or "Yeah, not nice to tell people lah." Okay lah, I do something like go and reduce a bit like my loss, cannot? Cannot. Yeah. So for liability as well, liability as well. If you owe 10,000, please get 10,000. You cannot say, "Yeah, not nice to tell people lah. I owe so much money, so I reduce a bit lah. I put 5,000. 5,000 cannot. Yeah, this is prudence concept. So according to prudence concept, you have to be very, very, very careful on all the losses, the liability, the expenses, that we need to incur. So it must be recognized immediately. Must be immediately. Yeah, you don't tell me, you say, I never mind lah, later lah, next year. No. Yeah. Okay, so it must be immediately. So that's why here you can see from the keyword, it said indicate a high probability of the losses occurring. Yeah. If the probability, if the losses, right, the high probability of losses will be occurred immediately, if you recognize it as losses already in the current year. Okay. However, for you see on the other hand, for gain meaning all your income, your sales, your asset are not recognized until they actually realize. Now, it is not so easy to recognize income. This is prudence. Yeah. So prudence says we have to be careful. All the losses liability, we must recognize it immediately. But anything to do with income, got to be careful. Only after we earn, then only is our income. If we haven't earned, it's not our income. Okay, so this is prudence. So prudence is actually very important. You find that a lot of accounting thing, like you talk about prudence. Okay, next one. Business premises is shown on the SOFP as 100,000. Okay, so we have this business premises, this building. So in the SOFP, we put 100,000. Okay, original cost 15 years ago. Yeah, 15 years ago, we bought this premises at 100,000. So until today, after 15 years, we still record, in our book, we still put 100,000. Right? Okay, so although its current value is 1.5 million. Yeah, see? Wow, today this premises value goes up to 1.5 million, but we still record at 100,000. We still require 100,000. So what is the accounting concept? What accounting concept we apply, telling us that we have to record based on our source document. Yeah, based on our source document.
Historical cost concept.
Sorry?
Historical cost.
Yes, historical. Correct. Yeah, historical. Historical. So historical, right? They don't care, As long as you buy 10 years, 20 years, right, before this, you still use back your historical. Okay? Yeah, historical. Historical cost. Yeah, so the answer is historical cost. Yeah. Okay, historical cost. So, but nowadays, we actually historical cost is kind of like, outdated. You can imagine, you see now, today the premises is worth 1.5, but in your book you still put 100. Isn't it understated? Right now, your asset is you see 100,000 and 1.5 million, so much different. Different by 1 point, don't know how many million, right? So that's why it is not, meaning your financial statement is not showing people the real situation. Not showing people a real situation. So nowadays, right, historical code is a bit out now. Now we have revaluation. We do revaluation, yeah, or we call it fair value. But all this is a bit advanced. So you are not going to learn this unless you're doing accounting. All right, okay. Expenses are recognized in the same accounting period as the revenue, which result from the incurrence of these expenses. So what accounting concept?
Matching.
Matching. Okay, how do you explain matching? Okay, matching is also very, very important. Matching is actually very, very important. Not matching. Yeah. Matching means what? You understand what you say, like that. Expenses are recognized in the same accounting period as the revenue which result from the incurrence of these expenses. So you know what? Sometimes, right, when you do some of the transaction, you realize that they say what? They buy on credit, right? Meaning they don't, like let's say you sell to the customer say, okay, I buy on credit. So meaning the customer will pay you later. Right now, if the customer pay you later, so my question is, does it still our sales? Is it still our sales? The customer say, okay lah, since you are able to give me credit, so I pay next month lah. So my question is this still our sales? Is it still our sales?
Oh.
We haven't received money, what?
I think yes. lah.
Yes, yeah, yes. Because of matching concept, yes. Yes. So meaning, as long as you already earn, okay, how do we consider as earn now? You see, this is the customer go into the shop, okay, he take 4 tires, and then this customer say, okay, I'll pay you later, within 30 days, okay, say, okay, I'll pay you within 30 days, Okay, so is this your sales? Yes. Why? Because the customer agreed to pay, and the customer already took the tires home, so this is considered as sales. So meaning we already earn, but we haven't received the money. Does it matter? Not matter. It doesn't matter. Okay, as long as we already earn, it's our current year sales. Whether we receive the payment from the customer or not, that one is another story. Yeah, so that's why we have credit side. Okay. Right. So that one is income now. How about expenses? Expenses means, let's say you receive a telephone bill. Okay, you should pay it by end of this year. Yeah, let's say December. But then you delay the payment, you delay until next year January. So in your account, because every year we close one time now. So in your account, by 31st December, still haven't paid. But we only paid in the month of January. So my question is, this telephone bill, this telephone charges, is it our current year expenses? Is it our current year expenses?
Yeah.
Yes. Yeah. It is our current year expenses. Why? Because the expenses already incurred. Already incurred. We already received the phone bill, just that we haven't paid. But is it our current year expenses? Yes. The answer is yes. Yeah, but we haven't paid. Okay, we haven't paid. So that's why when at the end of the year, when you close your account, you need to state under your current liability, you have to put, there's an accrued telephone charges. If there's an accrued telephone charges. So if I see accrued telephone charges, then I know, I already received the telephone bill, just I haven't paid. Is it our current year expenses? Yes. Okay, yes. Yeah, yes. Right, so this is called matching. Now, why do we do matching? Because we want to find out how much is our profit, right? Our sales, okay, minus expenses equal profit. So that's why we apply this what we call matching. Another name is actually called accrual. Another name is actually called accrual. Yeah, accrual. Okay, so we apply this so that we are able to find our net profit. So now, okay, if you understand this up to here, right? So meaning, can I ask you, the net profit, the gross profit that we calculated, is it cash term? Is it cash term?
Um,
Is it cash term?
no,
No,
not.
it is not cash term because some of the money we haven't paid or some of the money we haven't received. So basically, it's not cash term. So net profit is not a cash term. Okay, net profit of this is actually not a cash term. Yeah, all right. Okay, so we have done this. Then we go to question 2. Question 2. For each of the following independent situation, one or more accounting concept has been violated. State the concept that has been violated. Explain the correct procedure. Oh, yeah. This one, okay, this one later on I will project you the answer because this one, right? Yeah, you have to look at the answer, then it's easier to understand. Okay, but first you have if you don't know, you have a wild guess. What is it all about? Which accounting concept we are talking about? Which accounting concept actually already violated? Yeah. Okay, A, depreciation expense was not recorded for the current year because the management wanted to show a higher net profit. Oh yeah, you see, is this correct? Can we do that? Can we do that? Can we purposely go and understate our expenses because we want a higher profit? Can or not? Can or not?
No.
No, right? Okay, so which accounting concept we have actually violated? Number seven. Which one? Which one is violated? Which accounting concept we did not apply?
Prudence.
Prudence, yeah. Somehow prudence also can, but the most important one is in order to calculate net profit, we actually base on what?
Based on the revenue and expenses.
Yeah, meaning we use accrual, isn't it? Right? Okay, so the answer is actually matching accrual lah. So you see the explanation is that depreciation represents value of non-current asset that has decreased as a result of the use in helping the business to generate income for the year. So you see, imagine if you have a delivery van. Okay, first, why you buy this delivery van for your business? Because you need this van to help you to actually deliver, the goods that bought by the customer, right? Especially if you actually sell furniture, right? Correct? Yeah, a normal car can't put in a dining table or a set of sofa. So you need a lorry already, okay? A lorry actually, right? To help, to deliver the sofa to the customer's house. So now why you buy this lorry? Because it's for your business, right? Imagine if you have a furniture shop, you tell your customer, sorry lah, I don't do delivery. Do you think people will buy from you? Then normally people will say, no delivery, how to buy right? After I buy, then can't bring home or macam right? So that's why the business say, okay, in this case, I must have a lorry. So you buy a lorry. You see, this lorry is actually, the purpose is actually for use in the business, right? To help in the business, right? Correct or not? So in this case, but don't forget, this lorry, after you use it for 5 years, 10 years, do you think this lorry still as new as before? No, right? Meaning certain parts will rosak lah, this and that, right? Correct or not? Correct? Yeah. So in this case, right? So we have to match, You see, this lorry bring us benefit, but at the same time, right? We need to spend some expenses on this lorry also, to do maintenance, right? If it's if the tire set already, right? Or the tire, we need to change new tire maybe after 1 or 2 years, current, yeah. So that we want to make sure the lorry is actually in a good condition where it can actually help us to generate sales, correct? Yeah. So can you see the matching part? So the lorry help us to actually get our sales, but at the same time, this lorry, the more you use, the older the lorry become, then you incur some expenses. Yeah. So the income that generate from the lorry have to match with the expenses that actually created by the lorry. Correct? Yeah. So in this case, depreciation is a must in the SOPL in order to calculate an accurate profit. All right. So you see, this lorry, non-current asset, my example is the lorry lah. So this lorry has decreased as a result of use in helping the business to generate income. So it should be deducted as expenses for the period. So depreciation should be charged on this method. Yeah. So that's why we must have a depreciation. We must have depreciation. So now you understand depreciation is actually an estimate. Yeah, you are going to learn depreciation soon, or this morning you already did depreciation. I can't remember which chapter, but there is a chapter talking about depreciation. Right, so depreciation is actually the drop in the value of the asset which we need to consider, yeah, in order to find our net profit. All right. Okay, how about the next one? I see you can see the answer already. I think the next one not difficult lah. Mr. Tan, the owner of a sundry shop, included his family's personal use of some of the goods as business expenses. Mr. Tan, the owner, go and take some of the goods from the business and bring back home. Yeah, can or not? Bring back home and then say that, oh, this is a business expenses. Cannot, all right? Remember? Business entity, right? Okay, so in this case, this is a violation of the business entity, or we call it a separate entity. So this one, we have to record as what? As drawing, right? Right, correct? Okay, personal expenses should not be recorded as business expenses. So they should be recorded as drawings in the books of the business. Yeah, it should be a drawing. Yeah, this one you know. So it is a drawing, right? It is a drawing in the book of the business. Therefore, Mr. Tan should record all the personal expenses as drawings in the account. Okay, as drawings in the account. Yeah. Okay. Then the next one, we look at number 3. So the classic shop reported its stock of antique painting at 700,000. So the selling price instead of 300,000. Now, meaning, right, this antique, the cost price is 300. The selling price is 700. So the cost of the painting, 300,000 is the cost of the painting, and 700,000 is the selling price when you sell to your customer. So the difference was recorded in the SOPL as an extraordinary gain. Is it okay to treat as extraordinary sale?
No.
Antique painting, the selling price is 700. And then the cost is 300. So there's a difference of 400. So this 400, is it our extraordinary gain? So which accounting concept violated? Which accounting concept actually violated? Which accounting concept actually violated on this? What do you think?
I don't know.
This one a bit.
Substance over form.
No. Substance over form. Substance over form is actually like in your lecture note, the example. How do you explain substance over form? The best thing you give example, like let's say you buy a car, and this car is actually by hire purchase, right? We pay by installment. Right? So let's say you bought a new Proton X50, okay, cost you 100,000. Well, normally we don't have 100,000, so we go for hire purchase. So let's say we paid 20,000 down payment, so we still owe 80,000, right? And then we arrange with the bank. So let's say Maybank. So Maybank actually agree, to let us, pay by installment, meaning go for hire purchase. So meaning every month we need to pay Maybank. Let's say every month we need to pay 2,000 ringgit for 5 years, for example. Yeah, right. So basically, this X7, this X50 belongs to who?
The hirer.
Yeah, because you see, you still need to pay Maybank every month 2,000 because you bought this X7 car, X50, right? You only paid 20,000. No, you still owe Maybank 80,000. No. So my first question is, this car belong to who? This X50 belong to who? Yeah, belong to you or belong to the bank? Legally belong.
The bank.
Yeah, belong to the bank, right? So imagine if you stop paying for 3 months, do you think Maybank can tarik your kereta or not? Cannot. Maybank can, right? Maybank will say, ayo, 3 months you didn't pay, okay, I better tarik your kereta. Maybank has the right to do it, unless you pay, right? Yeah, but the thing is, are you driving the X50 every day? Are you driving the X50 every day?
Yeah.
Yes, you see, you still owe maybe 80,000. But then the car, you drive home or you drive to school every day. This is how you explain substance over form. Right? Yeah. So for this one, for part C, okay, the answer is Actually,
Realization.
the answer is prudence.
Oh, prudence.
Yeah. So you see, is it the paintings, okay, which are inventories and current asset of the business, should not be overstated. Yeah. You know, this painting is actually meant for sale. It's actually meant for sale. So that's why it's actually our inventory. So it's actually our asset, right? It's actually our asset. Yeah. So we should not overstate. We cannot say, oh, this painting is 700,000. You cannot use 700,000 as the cost of the painting and you put into your book. No, you should use only 300,000 because 700,000 is the selling price. It's different. Yeah, all right. So it should be stated at the lower of cost of net book value. So meaning between selling price 700 and cost 300, we cannot take selling price. We cannot say this painting is 700,000 and I am actually treated as my inventory. No. Yeah. Okay. So we can take the only the lower one. So it's 300. So this painting has not been sold and the gains have not been made yet. Yeah. Have you sold the painting? Not yet. So if you haven't sold, can you say you already earned the 400,000? You haven't sold,
yes.
right?
Oh, haven't.
Yeah,
No.
you haven't sold now. You haven't sold, then you cannot say you already earned the 400,000 now, isn't it? So to us, this painting only worth 300,000. Okay? So this painting has not been sold and the gain has not been made yet. So according to prudence concept, gain should not be recognized in the accounts until it is actually realized or sold. Yeah. So classic shop should restate the painting at cost 300,000. So meaning because the question say it actually put 700, reported stock 700. No. You can only report the stock at 300, not 700. Okay, at 300 only, not 700, yeah. So it's prudence concept. Remember, prudence concept say unless the painting is sold, then only we are able to recognize the 400,000 loss, the 400,000 gain. But this one we haven't sold yet. Okay, we haven't sold yet, so we can only recognize painting as our stock at 300,000. Yeah. Okay, next. Wait. I click here and there, don't know where already. Okay, number D. A motorcycle shop reports all its assets at current market value instead of its original cost less accumulated depreciation. Yeah. Motorcycle shop reports all the assets at current market value instead of original cost less accumulated depreciation. Can or not? Can you report at current value? Or you should report at your original? Meaning when you first bought this motorcycle shop, meaning they actually buy and sell motorcycle lah. So meaning when you buy motorcycle, right? When you buy motorcycle, your purpose is actually for resale, right? But the thing is, now you haven't sold it yet. Yeah. All its asset. Oh, sorry. This one, the motorcycle shop report all its asset at current market value. Or this one is the treat as asset. So let's say, but anyway, can you actually treat as current market value? Or you have to record based on your source document. It's like when I buy this 10 motorcycle, right, from my supplier, every motorcycle actually stated on the invoice is let's say is 10,000 each. So should I record in my book at 10,000 each, or I record at the market value? Let's say market value I am able to sell at 15,000. So which one should I record at 10,000 or 15,000?
It should be on the historical one.
Yeah, this one is a historical, yes. So we must base on our original source document. So this one is actually violated the historical cost. Yes, historical cost concept. Yeah, here. So all assets should be stated at cost less accumulated depreciation. So the owner should restate the asset at cost less accumulated depreciation. Now, in this case, right, this asset is actually not our inventory. Actually, this question is a bit confusing because when you really look at the question, right, it says motorcycle shop. Now, if I say motorcycle shop, meaning I buy and sell motorcycle. But if you look at the answer seems like telling you that we actually what? We actually buy the motorcycle for our own use. That's why we need to provide depreciation. If we buy and sell motorcycle, do we need to provide depreciation? It's our inventory. If inventory, we don't have to provide depreciation. But this one is, but the way the answer is historical cost concept, meaning this motorcycle shop actually buy motorcycle for its own use. So it's a non-current asset. So that's why we need to provide depreciation. But anyway, whatever it is, we should record as a historical cost. Unless we want to have value at market value. Now normally for asset that we buy for our own use, if we do not want to sell, we do not care about the market value. Agree or not, right? Because you buy, let's just like the lorry for the furniture shop. The purpose is actually to use this lorry to deliver the furniture that actually bought by the customer, right? Basically, do you want to sell your lorry? No, not our intention. Our intention is to use the lorry to bring business to our business, but not to sell. So if you're not selling the lorry, do you care about the market value? Would you care about the market value? Would you care about how much this lorry can be sold in the market? No, right? Can't be bothered, isn't it? Okay, so there is a difference, whether it's an inventory or whether it's an asset that you use it to run your business. Yeah. Now, both are asset. Inventory is also an asset. Non-current asset is also an asset. Just that one is long-term, one is short-term. Okay? All right, next one. Now, this one. Extreme trading changes its stock valuation method every year. Yeah. Stock valuation. How do you value your stock? Okay, I think this one eventually you also will learn. We normally have two methods to value our stock. One is first in, first out. One is weighted average. Yeah. Okay, so now the company wants to change the stock value method every year. Is it okay to change how you value your stock every year? Okay or not? Is it wise to change every year? Is it wise to change every year?
No.
Management would choose the method that will report the kind of net profit that it wants to portray its to shareholders. Of course, as a management, they want to show a good profit to the shareholder. Shareholder is actually the owner of the business. Of course, you want to show a good profit, right? So that's what you say, So this question is actually saying, okay, the management want to see which method actually can give us the highest profit. Can or not? Can you change the method every year? Can not supposed to change every year, right? Correct. So which accounting concept actually violated?
Consistency.
Yeah, consistency. Yeah. So meaning if you change every year, meaning it's not consistent already, right? It's actually not consistent. So once a method of inventory valuation has been chosen, it should be used consistently, right, from period to period to facilitate meaningful comparison. Yeah. Now, why consistency is so important? Because we want to make comparison. Imagine if every year you change the method, are you able to make comparison? No, right? Not possible, right? Yeah. Okay. So because of comparison, so that's why we keep our method. Okay. So change is permitted now. Is it strictly saying that you cannot change your method? No, can change, but must be a good reason. And then it can change. Actually can change, right? But with a good reason. Why you want to change? Yeah. Normally people change for a better situation, right? So if you find a better way, okay, then you can actually change. Meaning you must justify why you want to change, right? So change is permitted if the management feels that the different method will ensure the financial statement give a true and fair view and not to manipulate it to arrive at the desired results. So you see, you want to change can, but make sure it bring benefit to you. Yeah, bring and it's a true and fair view. Yeah, bring a benefit, not to manipulate, not to purposely, purposely say that because this year if I use straight line the profit is better. No, not like that, right? So if there is a change in the valuation method, the impact of the change should be quantified and shown in the notes to the account so that the user will know the changes as a result of the change in the valuation method. Yeah, so see, if you want to change, can, but you have to justify and tell people why. Why you want to change? What is the benefit? Yeah. Or if you don't change, what is the disadvantages? Right. So extreme trading should stick to one valuation method from period to period if desired. Okay. Yeah, if desired, a change can be made and the impact be reported in the account. So meaning, can you simply change? No. If you want to change, can, but make sure you are able to explain. Okay? Are able to explain, yeah? Okay, next. Arts Decor records revenue on receiving a customer's purchase order instead of when it delivers the goods to the customer. Yeah, Art Decor records revenue on receiving a customer's purchase order. Now, okay, this one is we sell to our customer. Okay, we sell to our customer. So what happened is this Art Decor recognize the revenue. Okay, when receive purchase order, purchase order, immediately recognized as revenue, meaning immediately recognized as sales. Can or not? Instead of it delivers the goods to the customer. Yeah. So remember last time we were saying when the income realized, then only we are able to recognize it as our current year income, right? So this situation is when you receive purchase order, straight away you say your sales is done. Cannot. You receive order,
No.
purchase order, then immediately you say, oh, I have a sales already. Cannot. Right? Cannot, right? Yeah, cannot. Purchase order only, people only order. Then you need to check whether you have enough stock or not, right? What happens if you do not have enough stock? Yeah, so meaning make sure you deliver the goods to the customer first, you issue invoice, then only consider sales. So what accounting concept do you apply this one? What accounting concept can you apply?
Prudence.
Yeah. No, it's not prudence. Yeah, I think you might not. Yeah. Answer is realization. Yeah, prudence also somehow can be explained. Yeah, prudence also can. But the more relevant one is realization, meaning how do you, how under what situation you recognize it as a self? Yeah, meaning it's actually realized. Yeah, so revenue should only be recognized when the sales has been realized or taken place and not when the order is received. Yeah, if you only receive a purchase order, that is not a sales. Okay, that is not a sales. So how do you make sure the sales is realized? Okay, a sales is considered realized when the goods are delivered. Yeah, okay. So you can see this one. Yeah. So a sale is considered realized when the goods are delivered and the customer acknowledge receipt of them and when the invoice has been delivered to the customer. See, you must deliver, the customer receive, and you must actually issue invoice to your customer. Okay, under these two situations is considered sold. Then you are able to, then only you can say, okay, the sales is done. Yeah, and I am able to recognize this as our sales. Okay, yeah, so therefore Art Decor cannot recognize this as sales yet. No. Purchase order only, man. Yeah, purchase order only. So that is not a sales. Yeah, okay, not a sales. All right, prudence concept, the next one. Okay, let's see what is the question. F and M has been sued by a local authority for polluting the river behind its premises. Okay, polluting the river. So there is a 60% chance that the company will have to pay out a very heavy fine which will drastically reduce its net profit. Of course lah, you need to pay fine, of course it will reduce the profit lah. So this was not mentioned in its recent financial statement. Is it okay not to mention? A 60% chance meaning it's more than 50%. High or not? Consider high? Consider high probability, you know? Yeah, consider high.
Oh, yeah.
Yes. So should we actually recognize it in our book, in our account? Should we recognize it? Should we recognize it as our loss? Should or not?
Yes.
Yes. Yeah.
Yes.
Can we recognize this? Yeah, we have to recognize it our loss, right? Prudence concept. So state that all possible losses or liability should be recognized and reported in the financial statement immediately. Yeah. So therefore, F&M should disclose the potential amount of the fine and losses in the financial statement, either by the way of a provision or notes to the account. Okay, yeah, either by the way of a provision or notes to account. So meaning you need to actually meaning you should include lah. You should recognize it or include in your financial statement. Yeah, telling people that okay, we do have this issue. Yeah, you cannot say not not doing anything. No, cannot. Yeah, have to report. All right, you have to report. Okay, so this is all the answers. So you see some of the answers are arguable, right? You can have more than one answer. Part B.
Can different answer and then different explanation, okay?
Yeah. So meaning like if you want to give different answer, can, but make sure you are able to explain. Make sure you are able to explain. Then it's actually all right. Yeah. Okay, part B. Since we have time, so we can actually quickly go through this one. So it said Katie argues that since her business deals mostly with cash, it is not necessary to record the utilities incurred for the month of December, although the utilities bills have been received but not yet paid. See, received the bill, but we haven't paid yet. So she plans to pay them in January next year and feels that these expenses should be recorded only in January next year. What would you advise her? Can or not? What do you think? The utilities bill, right, is for December, meaning for this year. But then, right, you only pay next year January. Can you treat these utilities as next year January bill?
No.
This is what happened. This is what Katie is going to do. Katie say, I pay in January, so this utility is January expenses now, can or not?
Cannot.
Right? You know why? Because you see the keyword. The keyword is actually here. See? Incurred. Incurred. Once you have incurred in the month of December, then it is the month of December expenses. Yeah, you incurred in December, that is the expenses for the month of December, regardless of whether the payment has made or not. All right. Okay. So can you say this is you pay now? You only want to pay in January. Can you say this is a January expenses? The answer is no. Yeah. The answer is no. So this one is according to what concept? What concept? What concept tell us that we, as long as incurred in December, then it's a December expenses. Which accounting concept says so? Which accounting concept says so? Which one? Mana satu? Which one?
Prudence.
No, matching. Answer is matching.
Oh.
Yeah, I show you. Yeah. Answer is actually matching. See? According to the matching concept, all the cost expenses incurred in an accounting period should be matched with the revenue earned in the same accounting period. Yeah. So regardless of the payment on the expenses have been made or not. Yeah, I don't care when I pay. As long as I incurred in December, that will be the December expense. Even though I pay in January, but the expenses still in the month of December, not in the month of January. Yeah. So the utilities have been consumed in December, even though it will only be paid in January next year. So therefore, these expenses should be deducted from the revenue in December. So Kathy should include these utilities bills at December. Okay, yeah, December, not in January. You pay in January, but you already incurred in December. So the expenses should be in the month of December. Yeah, so not in the month of January because you use the utilities in the month of December. So it's matching. Why? Because we want to find a profit. Okay, now this one, big boss. You are accountant or big boss. So from your experience, you noted that there were always some customers that have failed to settle their debts in the past. Yeah, meaning right, you find that every year we sure have some customer right unable to pay. Okay, so therefore you have proposed to provide an allowance for doubtful debt of 3% on the total trade receivable amount of 1.5 million. So your boss has strong objected to this proposal. How would you advise him? Okay, so now as an accountant, right, you advise your boss, you say, hey, Mr. Boss, every year, right, for sure, there are some customers who are unable to settle the trade receivable, right? So you suggest to your boss, you say, in this case, right, why not we provide, okay, every year, we provide a 3% on the total trade receivable outstanding, okay, to be put as an expense. Okay, because we already know every year for sure there are some amount we are unable to collect. So you suggest your boss, you say, okay, we provide a thing called allowance for doubtful debts, okay? Allowance for doubtful debt, yeah, okay, allowance for doubtful debt. So when you read the word, you also can understand that allowance for doubtful debt, meaning we might have 3% out of 1.5 million, okay, that we might not be able to receive, right? We might not. So we kind of like predict okay, 3% will happen. So in this case, then we treat as an expense. But your boss say no, cannot. So what do you think? Now, which accounting concept tell us that we should recognize this estimated loss? Yeah. If we are unable to collect from our trade receivable, is our loss, right? It's bad tax. It's our loss, isn't it? So now, since we have the experience, we know that every year, for sure, there will be some amount that we are unable to collect back. So meaning we got to be careful, right? So which accounting concept tells you that? Which one?
Prudence.
Yeah. Yes, prudence. This one is actually prudent. This one obviously is prudence. Prudence. So according to prudence, asset should not be overstated. Overstated asset will mislead the user into thinking that the business own asset that it actually doesn't own. Yeah. You see, right? Trade receivable is our asset. We expect to receive 1.5, but every year we know that around 3% we are unable to receive. So if you do not provide allowance for that, basically your trade receivable amount is overstated. So this is actually against prudent concept. Yeah. So this is the reason why assets should not be overstated. So to show a trade receivable figure of 1.5 in the accounts will be an overstatement. Yeah. So if you put 1.5 million in your S or FP, correct, for trade receivable, it's actually overstated because we are unable to receive 1.5. We will only receive less than 1.5. Yeah, we already know that. So okay, because we know from experience, okay, yeah, because we know from experience that this amount is not collectible in full, correct? Yeah, the question already told us what? Around 3% not able to collect. So from experience, we noted that there is an estimated of 3% or 45,000 that is not collectible. So therefore, the net trade receivable, okay, that are collectible should be 1.455 million only. So meaning you take your total trade receivable minus the 3%. So the 3% is actually 45,000. So you can only recognize 1.455 million in our book in the S or FP. Yeah, in the S or FP. Okay, in the S or FP. All right. Can I? Okay. And last one. This is the last one. Now, John, an eager junior bookkeeper, is concerned that the firm he is working for does not record depreciation expense for the firm's pencil sharpening. Depreciation expense for the pencil sharpener. How much is a pencil sharpener? Would you treat it as an asset? Yeah, a good pencil sharpener can use for a long, long time. Yeah, but can I ask you, how much is a pencil sharpener? So the
I
cost of
don't
this,
know.
yeah, the cost of these sharpeners amount to 100 and can be used for 2 years. The question tell you already lah. Is it all the sharpeners okay? Total is 100 ringgit can use for more than 2 years. So he feels that this sharpener should be depreciated using the straight line method of depreciation. What is your opinion? So should you treat this pencil sharpener as non-current asset, provide depreciation for 2 years?
No, I don't think can last 2 years.
Actually can, but the thing is the value is too small, it's only 100.
Oh,
So it's very tedious to provide depreciation. So in this case, since the amount is so small, so yeah, violated which accounting concept? Because John is thinking of treating this pencil sharpener as asset, as a non-current asset, and provide depreciation. Do you think it is necessary? Do you think it is necessary?
no.
Yeah, no, no, right? No, because the value is so small. Meaning it's actually immaterial, right? So we apply what concept? Yeah.
Materiality.
Yes, materiality. Yes, materiality. So the cost of the pencil sharpener of 100 should be expensed off in the year it is incurred.
Is
So
there
yeah,
is there a cutoff for the materiality?
yeah. Actually, there is. You see, some company they will say anything above 500, anything above 1,000. So meaning anything below 1,000, you don't treat as an asset. Then you don't provide depreciation. There is a
Okay.
cutoff. There is. Yeah. All right. Okay. So the cost of pencil sharpener 100 should be expensed off in the year it is incurred. So it should not be capitalized and depreciated over a few years because of its materiality. Hey, 100 ringgit. The amount is so small, isn't it? So the amount is small, and to provide for depreciation will be a waste of business time and resources. Yeah. So the benefit does not justify the cost incurred. Yeah. So what benefit do you get if you provide depreciation? No benefit give you more work not efficient yeah. So okay, so that's why this pencil sharpener, even though can use for 2 years, we can only treat it as an expense because of materiality. All right, because of materiality. Okay, yeah. Now, before now for this one, right? Do you have any question on your lecture note? Any part that you don't understand? Any part that you don't understand on this accounting concepts and convention? Any part you don't understand? Business entity, I think it's quite simple. Going concern, also okay. I think this note is quite comprehensive. Yeah, actually tell you which part is not clear for you. Money measurement concept is there must be a unit like RM, US dollar, Australian dollar, Sing dollar, renminbi like that. Okay, yeah. Accounting period, this one is we have a period like 6 months is one period, 1 year is one period. Yeah. You have to tell people what is your period. This is important. And you must know how to calculate also. Later on, eventually, I will test you. Do you know how to calculate? Yeah, like for example, very simple one. I ask you this question. Okay, let's say I say 1st January 2021 to 31st March to 1st April 2021. Okay, how many months? How many months? How many months? 1st Jan to
3.
1st April. How many months?
4 months.
4, 3.
Three or four?
No, wait, this is only 3 months.
Yeah, why you say it's 3 months?
Because January, February, and then March. And then April 1st, no, April 1st have April, so April 1st only, so April month haven't count.
Yeah, correct. Yes. Who is that?
Kelvin.
Kelvin. Yes, you are right. Yeah. So it's only 3 months. January is 1 month, February is 1 month, March is 1 month. 1st April. Can you count April? No, it's only 1st April. Now, for question like this, right? I would say, question like this. 31st March. 31st March is equal to 1st April. Do you agree? You agree?
Yeah.
Yes. 31st March equal to 1st April. Remember, 31st March. 31st March is balance. CD or BD?
CD.
Yes. 31st one is CD. 1st April is BD. These two numbers, are they the same?
Yeah.
Yeah.
They're the same? Yeah, they are the same, right? Okay, very good. Yeah. So this is the question that eventually you must know lah. You must know how to do it lah. This is actually very important. Yeah. So when you do accounting, these are the things that you need to know, right? Okay. Then we go for accrual matching. We have done quite a number. Okay, accrual and matching is very important. Accrual and matching, prudence, materiality. You realize that these are the important ones. Yeah, these are the important ones. You see, materiality. No, accrual or matching. You see how they explain, right? Revenue must be realized. Expenses incurred. Yeah. Then revenue. The realized revenue must minus expenses incurred in order to find our profit. Okay. Yeah. Okay, dual aspect, this one is a double entry. If there's debit, there must be a credit. Yeah, must equal, okay, dual impact. Prudence, this one is, we have to be very careful, estimate based on our judgment. Yeah, right? So meaning you have to be careful. Never overstep asset and income. And never understep liability, expenses, and losses. Okay, see, asset income not overstated, liability expenses not understated. Foreseeable losses should be recognized. If we are able to estimate a certain amount considered as loss, please recognize it immediately. Okay, see, reported immediately. But profit, okay, profit you cannot say like that. Profit must be certain. Or it must be certain. Actually happen. Only that is your income or that is yourself. Yeah. Consistency, this one meaning we apply the same principle, same policy must be the same from year to year. Okay, materiality, this one is how material. Is it significant or insignificant? If it is insignificant, okay, then we treat as an expense. If it is significant, it will have a big effect on the business, then it is a asset. Yeah, normally it's like that. Objectivity, this one is what? Based on proof, based on the invoice. Invoice, we see all this is proof. If you say, I already paid you, so show me your proof. Isn't it? Objectivity, based on your source document. So that's why source document is so important. Substance over form, you see this one? Yeah. See this example? Yeah. This example is the same example that I gave you just now. Yeah, you see, you bought a car, you're still owing the bank 80,000, but then every day you use the car, Yeah. So this car belong actually, okay, legally in the document wise belong to the bank. But then the car, who drives the car? You are the one who drives the car, but you still need to pay to the bank, right? So you see, A transaction and other event must be accounted for and presented in accordance with their substance and economic reality, and not merely their legal form. So sometimes it's not, we have to look at, this is what we call substance over form. We have to look at the substance. So legally, see here, legally the bank is the owner of the car, but in substance, the car is used daily by the hirer. Correct? Not? Yes, this sentence, right? So this is what we call substance over form. Okay, realization. Yeah, how do you realize that the sales is you have earned the sales? You have earned the sales. Yeah. So from just now the question, you are able to identify your answer, right? Okay, quantitative. This one is basically I think for you, yeah, normally we seldom test. I mean, for your level we seldom test the student on this. This is actually the quality that we need when we prepare our financial statement, like when we prepare our SOPL, SOFP. Yeah. So make sure the financial statement that you prepare is understandable by user. Understandable by user meaning not every our duty is not to make sure everybody understands. Our duty is to make sure, okay, make sure those with reasonable knowledge on accounting able to understand. Okay. Not those who sell veggie in the you don't expect those who sell veggie in the market know what is financial statement. Yeah, that's what it means. Okay. Reliability. Okay. The information that you put, every single number that you put into your SOP or SOFP, is it reliable or not? Reliable or not? Meaning, is there any mistake? It must be free from material error. Material means the amount is big. Yeah. And bias. Bias means you actually, you are not honest in a way, right? Dependent upon. Yeah. Okay. Make sure it can be reliable. Relevant. Make sure can be relevant as well. Why? Because people will use your information to make decisions. So make sure it's relevant so that people can use your information to make decisions. Yeah. And make sure it can be comparable. Now comparison is very, very important. If you don't compare, you don't know how good or how bad our business, right? You must compare. You must compare with other business. Then only you know, oh, we are not doing very well. Oh, we are doing quite well, blah, blah, blah. So if you don't compare, you don't know how good or how bad is the business. So comparison is very, very important. So comparability. So these are the four main characteristics that when you prepare a financial statement, you must have these four characteristics. Yeah, because people use your number to make decisions, right? Yeah, to make comparison. Okay, to understand the situation. Okay, so this is your chapter 5, the accounting concept. So if you do accounting, definitely you need to learn this chapter. Yeah, because this is like the principle that you need to apply. Okay, the concept that you must have, in order to do accounting. All right. So far this is after 6 chapter. This morning you did chapter 6. So what do you think of accounting? Is it interesting, or you find that it's there are people who cannot do accounting. Even some of the students, they do diploma in accounting, but they can't pass accounting paper.
It's just very tedious. I think I can understand the concept. It's just very tedious to do all the things.
Yeah. Now you know why it's tedious, because you are actually learning the very, very basic. Yeah, the basic is very tedious. Yeah, debit, credit, right? Yeah. Actually, because why? Because you are learning the basic.
Yeah,
so
the
meaning,
debit credit thing, I still some trouble to separate.
So meaning today, if let's say you are a secondary student, that's what you learn from the very, very beginning. This is what you need to learn. But of course, now we make it as a subject. Actually, you see, every 1 week you learn 2 new topics. So that's why it's important that the first 3 topics you must understand. Then eventually, you know how to apply them. Okay, eventually then you know how to apply. All right. Yeah. So okay. So for this chapter, I think chapter 5 no homework. Oh. So if this week chapter 5 no homework, so can you, if you haven't done up to tutorial 4, please hurry up. Yeah. And then so today you can do tutorial 6, right? So next Monday we're going to do tutorial 6. Okay, and then at the same time, we're going to do revision on your test now. So do you have any question to ask on the test topic? Any part that you don't understand still?
Until
Yeah.
tutorial 3 only, or because tutorial 4,
Until tutorial 3 lor. First 3 chapter is tutorial 3 lor. Yeah.
I just hope the details I put in correct. I think the
Okay.
format okay.
Yeah. I think I project you the tutorial 4 lah, because some of you got the kind of like the mistake, right?
The ledgers.
The
I really-
ledgers. Yeah. This is the tedious part, right? Yeah, this is actually the tedious part lah.
that part is
But
nice.
yeah, but you have to remember, if it's asset, liability, equity, when you close the account, you put CDBD, right? Asset, liability, equity. Correct or not? Like this one is equity. This CD, this one is asset. Then you have CD, right? Okay, this is liability, right? Trade payable. Then you put CD. If expenses, sales, okay, if expenses, sales, income, how do you close your account? You put to SPL, meaning SOPL. Yeah, I'm more used to using SOPL lah, because it's called Statement of Profit and Loss. Yeah, okay, SOPL lah. Right? And then you must also need to differentiate. Now you see like this one, other payable. This other payable, okay, why other payable? Because we buy furniture and fitting. And the furniture and fitting that we actually buy is not for resale. It's for our own use. So meaning this company cozy is not our trade payable. Trade payable means you buy from the supplier and you are going to sell it. Like if you run a tire shop, yeah, okay, those supplier that actually supply you with all the tires or tires related goods, these are your trade payable, because you buy from them and you are going to resell. Your intention is to resell. That is your main business activity. That one is called trade payable. Yeah, like this is trade payable. But if you buy furniture and fitting, you buy a motor car, right? Okay, this is not trade payable. Okay, it's not trade payable. It's called others. So these are the things that you have to differentiate. Okay, yeah. So I see some of you, some of you here maybe cannot balance, but I think mostly okay. Know how to put debit credit. Now, you see in accounting, it's very simple. First, you must understand. Let's say I ask you utility. You must understand what is utility. Okay, utility is actually what? Telephone bill, water bill, electricity bill. Now, all this is expenses, isn't it? So you see, so that's why you must understand the items. Like what is wages? You must understand what is wages. Okay, wages is part of the cost of goods sold. Okay, wages is part of cost of goods sold. Salary is expenses in your SOP is expenses. Yeah. So you must identify, you must understand what is the item. So that's why you have to understand what is trade receivable, what is trade payable. Trade receivable is our customer still owe us. We are going to get our customer to pay us. So it's called trade receivable. Okay. So trade payable is we buy and we are going to pay. So that's why it's called trade payable. So you see, you recognize from the English the words payable meaning we are going to pay. Receivable means we are going to receive. Right? Yeah. So of course, this is the format that you have to remember. But in exam, we will not test you chapter 4 type of question. Because chapter 4 type of question is too easy. In your exam, right, we will test you after the end of the semester. Basically, you learn the whole basic. So we are going to test you accrual prepayment. Yeah, meaning what happens if certain expenses, on the day when I close my account, I still haven't paid. So how are you going to treat this electricity bill that I should have paid, but I haven't paid, and I will pay only in the next year? So how do you treat this transaction? We are going to test you this. So meaning the SOPR, SRFP that you need to do for exam is not like the chapter 4. Chapter 4 is too easy. Chapter 4, there's no adjustment. No. We are going to test you with adjustment, like depreciation, allowance for doubtful debt, all this. So that's why you need to learn chapter by chapter. What is depreciation? What is allowance for doubtful debt? Then you combine everything, then you are able to produce a full set. Full set means statement of profit or loss, statement of financial position. Okay? Any part of any tutorial for answer that you want to see? Because I think some of you did not do all the question, right? Like this question 3 is very easy. This one shouldn't have any problem. So those that you want to see, maybe like this one. I think this one we did together, right? Okay, so this one we need. Yeah. So question 2 actually I think we did together. Yeah. So you see this one. So whatever it is, your profit or loss. So here, this one must be profit or loss. It cannot be both lah. It's either you make a profit or you make a loss. That's all. And this number should put into your SOFP, right? Under capital, right?
If it's a loss, do we still put bracket the number?
Yes. Yeah. If a loss, then you put bracket. Okay, I'll show you. Here. See here, right? If it's a loss, right? What happens if it's a loss? Okay, if it's a loss, then you put bracket lah. You say it's a net loss, right? If it's a loss, then it's a bracket lah, like this. It will be like this. It's a bracket. Meaning minus. If you put bracket means minus. Yeah, actually means minus. Right? Okay, so it's either profit or loss. You cannot have both. You don't put net profit and net loss. No such thing. It's only either one. Yeah, it's either one. So you see, from here, okay, your statement of profit and loss, you found a profit. Then this profit you have to bring up to your S1FP under the equity start. Okay, Ken? So you need to do revision, then only you have question to ask. If you don't do revision, you got no question to ask. So I would say your test 1 is all the very, very basic one. So make sure you know how to do 3-column cash book. Yeah, 3-column cash book. So make sure you know how to do 3-column cash book. Make sure you know how to transfer your discount allowed, discount received to the ledger, to the T account. Okay, to the T account. Yeah. Make sure you know how to do sales ledger, purchasing ledger. Sales ledger is the individual customer account. Your trade receivable individual. Purchasing ledger is the individual, the supplier's account, right? Yeah. So because of time constraint, I think these are the questions that they will test you. Okay. Then for that is chapter 2. Chapter 1, what they test you is, okay, accounting equation, right? Asset equal to liability plus equity, right? So in this case, you must what? You must make it balanced, right? So it's like so for chapter 1, right? They will test you the accounting equation, Yeah. If asset increase, will liability and equity increase also? So remember your tutorial. Okay, you go and study your tutorial. They might test you. The test question might be similar to some of the question in your tutorial 1. Tutorial 1. And you still remember your tutorial 1? You do like this: liability how much, asset how much, right? Yeah, it could be like this. See this one. A very basic one, like discount receipt. Is it debit or credit? What they ask you? Okay, advertising, debit or credit? Is it an expenses? Things like this they will ask you. Yeah, so this is your chapter 1. Chapter 1 is a very, very basic one. Of course, I can also ask you theory, right? And I can ask you what is accounting. Explain briefly what is accounting. Can or not? Accounting. What do we do for accounting? Collecting, recording, summarizing, communicating. Right? Okay, so chapter 2, can I ask you theory? Can, cash book. So I ask you, what is trade discount? What is cash discount? So you explain. Can I see this one? Yeah, this is chapter 1. Chapter 3, I might ask you to do sales journal, purchases journal. I test you, I give you the question. In my question, I have cash sales, I have cash purchases, I also have credit sales, I also have credit purchases. Okay, then I ask you to prepare, to prepare purchases journal and sales journal. So I want to see how do you record credit sales and purchases? No, your credit. How do you record credit sales and credit purchases in your sales and purchase journal like that? Isn't it correct? Yeah. So basically, if you have done all the 3 tutorial 1, 2, 3, I think pass is not a problem. But if you want to score, let's say you want to get a very high mark, like 90%, okay, then you got to put in a bit of effort lah. Isn't it correct? Yeah, you got to put in a bit of effort lah. Okay, so I think that's all today. Now, the tutorial question that I shared with you, right? You can actually do it as a practice, yeah, as a practice for your coming test. So after you have done, you can actually let me check. Also I can actually mark for you, no problem. Yeah. Okay, I can actually mark for you, not a problem at all. Is loan categorized and non-current? Yeah, loan is non-current liability because loan normally more than 1 year. Yeah. All right. Okay.
Okay.
So, okay, I'll see you next Monday. So next Monday, I hope you ask questions on those topics that you're going to have your test one, yeah? All right?
Okay.
Okay.
Yeah. So take care, yeah, everyone. Bye-bye.
Okay, Miss. Thank you.
Okay. Thank you, Miss.